Morning, Disputed. Morning. Morning, Kimberly. The whale reshorted? Interesting. Sinful Jason. 2 months. Let's go, buddy. Uh, John Marston. Disputed. 38. Let's go, buddy.
Thanks for the fun times.
This G Wave's about to go, isn't it? Hello? Why did that take forever to fill? Okay. Good start. Sit down, make some money. Geez, $20. Is there news on G Wave? I want to work on. Photo, it's um Well, 9 o'clock. They should have said something. I don't know. Someone might be in the can. Oh, spine freaking taking a shit this morning, huh? ITP? Is that something you bought? You're on crack, homie. 37% is not, no, 100%. When did it hit 46? You almost got it. Damn. Verified might get it today. We'll see. This market's not helping him out right now. Good morning, Kimberly. SSK in it, scanners. Of course, it's a slow morning, isn't it? Morning, Chicka Bow Wow. Good shot, buddy. Prime. Whoa, SMCI juice here. Just new business line, data center building block solutions for data center facility equipment manager. Blah 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 blah. He said data center. Send it to the moon. SSKN. LITM going. Swim mood yesterday. What's up, pizza? Any hundreds? We got 2 more today. 2 more entering in to the halls of glory. We got, well, Chicka Bow Wow. This will be his 4X. And then Tommy Hayes, the whole of glory. What's up, Tim? Jeez. Deep cheat.
SJ, what up, shorty?
55 freaking months. Not putting up with this guy. Anyone on this NVA? Got it short from the highs. Damn, pizza. Freaking making some lunch money early on here. What a short. This LATM is just kind of juicing here. Go touch 7, it looks like. Dude, 55 months? It's an obscene amount of time. I've been trying to decipher what you're talking about for that long. AMD got news? Could have learned. You right. See if Subaru's got any thing on the watch list for us today. RPGL, Republic Power. Oh, they know. Man, I swear these peeps over in Asia, where is this at? Singapore? They know what IPO names to put out there. They're freaking geniuses. Power? Come on. Come on! What's up, Matt? Time to mortgage the house, boys. This G-Wave's interesting here. MACD is down, sellers showing up. Disregard. $50,000 AMD AI chips. You know what it tells me is just there's such a low supply. If they're willing to just take it, basically an inferior product, then they just don't care. They just need chips. Is it inferior? I would say it probably is. More and more. I'm lactating. Son of a bitch. My finest moment. Walmart, OpenAI. Something partnership, OpenAI, blah, blah, blah. Partners create AI first shopping experiences. Oh my gosh. Shop Walmart using an instant checkout. So, first one was Etsy, right? It was Etsy and ChatGPT for this kind of thing. Yes, or was it Pinterest? Definitely Etsy. Dude, look at Walmart just ready to bust the seams off of this 52-week high, cup and handle, whatever you want to call this. Is this the news to do it, or is this just going to reject it and send us back down? SPLX. Well, I'm glad I saw this Walmart chart. I'm going to stay in this regardless if this thing pulls back. This chart looks great. I don't like that it's kind of pierced it here and got rejected. There's probably a lot of sellers here in this level, 105. But if it holds it, gonna have a day. Yep. This ETH-Z. Yeah, when are they gonna freaking load up and let's go, right? Freaking ETHZilla. SSKN, what you doing? That's funny. Okay. That was Peaches. She said she's getting the rest of the teeth taken out. I couldn't be happier. YDDL. Okay. All right.
YDDL.
Yeah, Savage making me pay 5 extra biddies. All right. See what you're doing. I will remember that. I will remember that, Phoenix. Oh, you're lucky. It got filled at $4.99. Disregard what I said. 1 and 1 green. This is one of the Chinese pump garbages that didn't even IPO well. This will never ever double. I hope you know that. Phoenix MSC 10, 14, 25. 1 at $4.99. Boom, you're in. Yes, pizza, you do. You have $10 worth of credit. Izzy's got 5, I believe, as well. QS. Yeah, it got so damn close, pizza. But I get, well, you need to get 2076. So you're a ways up there. That's going to be a big P&L winner, though. Y'all need to take note. See, these bigger plays, I think people are, when it comes to come January, like this is only a month move and you almost got 100% move on a $10 stock. Like that's going to count a lot more. That's going to be the equivalent of 2 $5 moves. As far as the P&L goes. Can I buy NGRBF? Probably not. NGBF. That would be a no. Okay, so get the hell out of here. Get the hell out of here. All right. 5-minute break. Be back for the open. Oh, I got to put WMT on here. WMT already given most of it back. Thank you. Make it a world ETF. SSKN looking decent, but we've seen all sorts of crazy stuff out of the open. Yeah. Elab. Who had this? Some getting in. Vega's in. I didn't see that it actually hit 100%. Wow. All right. You're in. Vega again. X1 Vega 10 25 25 14 25 sold one at 9 14 asterisks. What a move. Okay. Let me make sure there's no other crazy ones like that. Okay. G-Wave coming back up. Is this whole thing up? I don't know how I feel about that. Okay. That shows 2050. I'm happy. All right. 4212, is that right? On the resumption? 4212. Yeah, market's taking a giant poopy poop. VIX is at 2240. Interesting. The tick is not crazy. One day min all over. You know the deal. Watch Friday's wicks. Good point. Let up. VIX 18%. Not hitting high day. Yeah, we're well below the 1 day min here. Put it. Watch this NUKK daily breakout. Isn't that just coinky dinky? G wave flat resumption. Is that what this is showing? SBLX, nice pop and drop. Come on, this has a chance to blow through the 72 and then blow through 20. What are you going to do here, bud? Oh, 2 minutes. MNTSW. You got close. You got close. Wait, yeah, you needed 7. No, you needed 8. That's what you need. You got close. I was rooting for you. I'll show my doorknob what I can. Can moving. LAES juicing. LAES, Seal, SQ, and WeCan announced collaboration to develop post-quantum KYC solution to secure client data for the financial industry. Post-quantum. No idea what that means. All right, gonna open soon here. I don't know if that's the actual time. Oh, no, it's not. And what the what? A gap down? Suck my dick. I'm getting out. Well, that's great. Now I'm red on the day. I don't even want to watch. And now I'm gonna go take a giant shit. Cool off. Oh, that's real cute. Freaking $24. That's real cute. Why is this thing so freaking 50-cent spreads? That's rough. CCCX. Playing with that 26. Big buyer down here. GWH down. Whoa, BBAI. Getting there. You need 920, 962. Let's put the order in.
Morning, boss.
Morning to you, Air Dush. Freaking nay. G-Wave. 1 minute would be 23 break. Gosh, this 50-cent bullshit here. 1 minute here. Would have paid. Oh, that's not a 1 minute. It's still 23. This is not right. And that thing's not looking so pretty. CCCX broke. So close. Nope. It's got to hold that 26. Oof. like we're gonna be crawling out of holes this morning. FRMI is interesting as well. AMD curling up. So AR hitting the scanner. So AR. That's a nice move there. AMD going for it. See if this can give us one more pullback before maybe breaking out. So AR. That sucks. Nuck is still going. Nuck, really nice moves today. Actually, it needs. All right. Moving on. Some big pokey. Yeah, LAES had a nice move early. NTS. G-Wave, is that going to get the 20 bounce? $0.50 for it. Get out of here. wanted the 1120. It's 1115, pretty big daily level, right? And 1157. Weg Sir 14. Let's go, homie. Well, everything I was watching stopped looking good. Maybe the CCCX again. I don't know. Wolf Daily. Yeah. Nice work, Chase. Sent you a DM. RG. What is this? Defiance Daily Target Short RGTI. Uh-huh. Who announced a short position? This thing just took a poop. The chart has not caught up to the L2. OpenAI and Sir Energy signed letter of intent to explore a large-scale data center project in Argentina. SUR? I don't know who that is. G-Wave did hold 20. As for Canes, see some of that. You ever short? Oh yeah. When the market says short, I short, baby. I let it all hang out. As soon as I sell, it jumps 10 cents. Suck a dick. NUAI. Okay. G-Wave trying to hold 20 again. SOAR, really tight 5-minute to play off of. MACD's down. It's a 60 break. G-Wave broke 2150. And is holding. Damn it. The spreads are 60 wide. Like, what are you supposed to do there? AMD down. Buy, bid, sell, ask, shut your mouth. How dare you bring up buttons I don't have? OKLO, 5 minutes are pretty tight. Same with SMR's not as tight, but same idea. Jimmy. That's quite the pullback. Rum Daily is going to be the first hit, first hit in quite some time. As long as yesterday's close holds, I'll stay in that. E. Wow. Wow. Gave every bit of it back. That's crazy, dude. ETH breaking out here? LAES? LA.
LAESLAEX.
Oh, okay. What do you want there? What do you want there, pizza? You want LABX? All right. So you're using your credit and the extra 10. Got it. Wait. 2x long ALAB? I like it. Pizza Wrangler. 10. Oops. 14, 25, 1 at 1979. Boom, you're in. This thing is just pissing me off. It's not doing anything. Out of that. SOAR broke. Top side. A lot of movement in crypto right now. BMNR, what are you doing? This is 53. No spreads ever. We mark. Listen, Canes, you freaking A. Can't come in here sucking cheese's cock. All right. Don't encourage the man. The cheese whiz. That's freaking funny. Gonna hit it? Or you just gonna look at it? What? Oh, shit. Wow, G-Wave just freaking dumped. Oh. Akela's repping. SMR, what are you gonna do? Follow suit? Kilo. Wow. Nice. SMCI, now it goes, you piece of shit. Man, this is not moving fast enough for me. I'm out. NVIDIA, that was a nice 5-minute on NVIDIA. From Canes? Oh, I'm sure it is. Yeah, I got so close. TMQ. Oh, wow. Maybe KUI, Big Pop. RGTI. Now it goes higher. Jeez. It's moving really well. Yep. TMQ got on the list with that move. Some CI, nice move. Sell and they ask. Would be real nice right now. Oh, there it goes. AMD's juicing. What's up with Kodak? Huh. Yeah, APLD. That could get crazy here. If it gets over that, what is it, 39, 33? Got the cuck on the daily, didn't do anything, bouncing off the upper Bollinger Band. Could get nuts. Kodak car. Okay. Go row. Does look good, Annie. AMD's juicing. TMQ not holding much. Wolf. Wow. Yeah. Big flow, but she can grind, man. LITM back to the VWAP. Keep that on the side chart in case it wants to get funky. YDDL, is it? Son of a bitch. Oh, shit! That's big. That's real big. Oh, shit! Oh, come on, that Phil. I got a spam caller right then. Was up a lot. Go to cancel the spam call. Missed the exit. I like that. Okay, Phoenix. Okay. Needs to hold 6. Six is the level. Did this thing? Oh, this thing went crazy after hours that day, didn't it? I think. Okay, hello, nice curl. We went to 2880. Why doesn't that show up on my freaking chart? E-Trade. Trade's out to get me. YDDL. Let me put it over here. Son of a bitch. Okay, big buyer. Oh my gosh. LAC is at $9. I sold it under 8 this morning just to get out of it. That would be a $2,000 win. I just flushed down the toilet. Stocky called out YDDL. As a yellow. TMQ consolidating. Okay. Just exiting. I'll revisit this whenever it looks good again, but not what I was hoping for. I'm going to miss this one. Yep, just missed it. KLO, just missed that one. SMR 5 minute over 46. Okay, hello. Jeez. Oh, come on. Give us something here. Your big brother's going to the moon, damn it. This is 64. No! You me again! Gosh! As soon as I hit the sell button, drop it! Drop it! He's gonna make money! I hit the sell button. What was that? 56, 57? See if it does it again. Oh. Suck a dick. Made money on it. Bastards. Gosh. And then you go. Okay, it's gonna be that kind of day, huh? We're gonna have to get in the freaking trenches today. SMCI flat top breakout potential. Trench is only 9. Damn you, Nene. Oh, it broke. Can I hold now? 95 is the level. 94. 95? Hey, we broke. I hit the sell button twice, E-Trade. Okay, there we go. Now it's going to go through. Now it's going to go through 55. Yep. Just had to make sure I was out. This hurts me so bad. I sold this at 7. Greenlight has a new stake. It's a pretty big float. I don't know if they're going to be able to move it. I'm just going to get out. Maybe it's already moved. Okay, hello, up against yesterday's high. 75.90. Spy 660. Listen, I called it. I freaking called it. And you know what? I was talking to my buddy. I was like, this was so orchestrated. This whole thing was so orchestrated. Trump has talked about tariff this, tariff that all the time. For some reason, yesterday's tweet set the market, or not yesterday, Friday, set the market in a spiral. But I feel like it was a coordinated sell-off. They needed a spark. They got a spark. They started pouring gasoline on the spark. Started the sell-off. The panic ensued. Retail sold. It was all saber rattling. He did this the last time they had a talk with Xi. Maybe we should talk. Maybe we need to do tariffs. Blah, blah, blah. It's the same. He needs to change up his game a little bit because it's a little too predictable. Put Discord, saber rattling. Bet they all kiss and make up. Come Monday, what does retail try to do? They try to buy the dip. Guess what? They can't because their funds aren't settled. They can't buy the dip. What happens Monday? Big boys load up. And also Sunday night, what happened? Trump puts out a tweet, says, oh, don't worry about China. We want to help China. We're best friends. Market, huge bounce. Now retail's back in the game today, but buying higher if they want in. What happens today? The reshort of the open? Yeah, I don't know. I can't explain that one. Wow, we hit Friday lows this morning? Damn. I didn't realize we got that low. Yeah, I have no idea what caused today's down move, but we need to get above the, let's call it 64.50. Oh, yeah, crypto. Maybe it was all about crypto. Maybe it was just absolutely murdering the shorts, or I mean the longs in that, all the leverage. It was all just a flush out for crypto. I don't know. I don't know what the play was, but it was definitely coordinated. You don't always have ES daily charts somewhere. Probably right. I did look at it this morning, but for some reason I didn't notice that it hit that low. Still don't see it. What the hell? It's weird. Conniption, let's go 16 months, my man. CCCX, trying to fight with the 26 still. Okay, hello. X. Salesforce and OpenAI app is now live. What the tweet is? Holy horseshit. Fills. That didn't do anything. 80 sold. Small win. AMD's building out some structure here, going for that high day move. TQM or TMQ, sorry. Broke through 10. Joystick, you're looking like a genius here. Back under 10. Feel like I should buy that. Should have. YDDL. What's the deal here? You look so fun, and then you freaking did that. OTZ. Market is just juicing. Throw your tire count in the spot. TMQ 1040, 1042. Coach Rid, let's go. 63 months.
1-0 in fantasy hockey. Looking for that most improved award.
You're beating me this week so far. I was disappointed in my team's performance. My number one pick, Kucherov, has got 1 fantasy point in the last 2 games. So that doesn't bode well for me. TMQ, what the hell? This thing is juicing, man. Stevie's way here. I don't know about that. Dude, this TMQ is insane. you see Hustle calling out? Huh. Good. 650 holds. Ladies and gentlemen, gather around. Lords and lady. As we mute Discord and introduce into the halls of glory the latest members of the 100% Club of the ETF Me in the Ass ETF Viewer Funded Retirement Fund, which is now over $2,000 and climbing. We will dominate all of the streaming platforms out there. We will show the world, the brokerage firms, the hedgies. We will show them that they are our bitches. But alas, let's get right into it. For once again, the Chicken Cluckson victory. For the fourth time, yes, fourth! Chicka Bow Wow finds his way into the sacred halls of the 100% Club. This time with a tidy trade on QSI. Bought at $1.05, sold it at $2.09. A clean double. Another feather in his cap, or should I say, in his nest. From CJET to Cock to CHNR and now QSI, this trader has gone from humble hen to full-blown rooster of riches. The man doesn't just taste 100%, he farms it. All hail Sir Chicka Bow Wow, now a 4 times member of the 100% Club inductee, who proves again that while the market may peck at you, sometimes the chicken bites back. Now, under Tommy Hayes. Oh, it's his NVTS? Oh, there it is, in all its glory. Tommy Hayes. A mastermind of trades. An absolute banger. See, some trades are wild swings, others are pure luck. But every once in a while, a trader connects with lightning. And today, we celebrate Tommy Hayes. On September 17th, he bought NVTS at $6.27. And on October 13th, he unleashed the current, selling at $12.68 for a perfect 100% surge. A shock to the system and jolt to the ETF me in the ass. We were fund a retirement fund. While others fumbled in the dark, Tommy Hayes flipped the switch and lit up the leaderboard. With precision and patience, he doubled his power, proving once again that voltage doesn't just flow through wires. It flows through profits as well. But alas, one more. The unforeseen, the X1 Vega. A story as old as ETF me in the ass itself. For X1 Vega joined the 100% Club, not through timing or fortune, but through my unconsciousness. You see, he bought Elab. On September 15th at $5.77 and sold today at $9.14. You might say that's not 100%. Well, during that magical moment, it did hit 100%, but of course, I was asleep. Yet the rules are clear. Stock jock naps, the people eat, and so, by the mercy of slumber, in the spirit of fairness, X1 Vega ascends as a knight of the 100% Club. Let it be known, some chase dreams, others profit while I dream. And with that, another chapter is written. From feathers to voltage to dreams. The ETF me in the ass, ETF your fund or retirement fund grows even stronger, fueled by luck, chaos, and dangerously unstable sleep schedule. And now we will raise the banners. Chicka Bow Wow. And now 4 times member. Creeping up on the old Pizza Wrangler. Tommy. Our newest member to these halls. Rise. And X1 Vega, who's not even online right now, has no idea that he's entering into the 100% Club. Rise. And welcome, dear God. It's a lot of cock. My nipples are hard. Ladies and gentlemen, today's class of the 100% Club. We welcome you. May your glisten ever shine so brightly in these halls. May you walk them with every step. Leave traces of green from your profits. And your aura grow in kindness. We look forward to the next class to join these halls. May some of you keep trying and never make it. But for those that do, we wait your presence. Good good acid there, green. All right. What am I missing? TMQ. What are you doing here? 5 minute? Hmm. A lot of sun. Got 20. No, not ready. Oh, do it. Hey-oh. Hot dog. Hot dog. That's all I wanted. We had a little cuck right here that didn't do much. Resistance level above, so I was going to take the next cock, cantilever candle, for those that don't know what the hell I'm saying. Cantilever candle. Looking to break that, sell. The MACD is down, so I didn't think we were going to rip past it, but certainly a liquidity level to play into. It's clean. It was clean. I didn't think it was going to go for a second there, but then it did. Knock back down to this 11:15 area. That might have got me green on the. I don't want to look. I don't want to look. I don't know what I started with. I don't want to look. I think I'm close. Probably like $100 red, maybe. Maybe slightly green. I don't know. I don't want to look. How are you all doing today? Green or red? Type in chat. Green or red? Shiza's green. Nice, Shiza. Nice. Guzanka? How do you say that name? Green. Pork fried, clean. Boots, 3K red. Wag yellow, flat. Snow Panther green. Wang red. 2.6K green. Dyed nice. Getting my bull for a week. Are you still in it, honey? Bit green for engineer, sorry. Digit Hawk red, Anthony red, barely green Luke. I'm not looking, neither am I. Green like baby shit. What? Chickabow? Anthony's red 75, lowly red, back and forth so far. Green thinks it NUAI. Paper trading, nice, nice. Phoenix red, pork fried green. So it's like 50-50. It's not like across the board here. The setups have been It's G-Wave. Nice losing batter. 1-2. This 5 minute on Walmart looking real nice, actually. 105 hold. Might be a diagonal through here. Yeah, it's pop or drop time here. Ideally, you get, I mean, it's so tight. Really pushing for where it should be. Maybe you get a cuck and go, or just roll over and die. trying. Hit that resistance to a penny. Gotta get over 11. Wang, let's go, bud. Throwing just 200 biddies at me. Just slapping me in the face with it. Thank you, Wang.
MNTS.
No, Wang, it's a $5 minimum. You know the rules. You're literally in. Aren't you in the 100% club? Okay, now he goes. And I missed my trade. And I missed my trade. All right, what was it? MNTS. Okay. $5 at 181 gets you 2. Boom, you're in. Boom, you're in. XH Wang Gang. 10, 14, 25. 2 at 180. Boom, you're in. Did Walmart go? That's still fighting with it. Certainly would be up right now. This is 13, 14. Listen, if I did $1 minimum, whoa, AQMS, what the hell? I'd be spending all day just doing negative. Attorney General's filing enforcement action on Roku. Don't know what that means. Oops. Okay, well. Let's cover it up. Small win. Not really sure what that headline means. It's coming from Beta Check. If you're interested in the news sources that I use, there they are. Should put them over on YouTube. It's probably best. Let me do that. There they are for you YouTubers. YouTube of Yube. If anybody else wants it, let me know. Oh, that reminds me. I was offered a sponsorship. I make like $300. But if you guys are interested in it, I'll do it. It gets you guys, I think it's like a HelloFresh kind of thing, but it's a different company. So, you know how HelloFresh, whenever they sponsored us, it's only new accounts that get the deal. Well, this would be like a HelloFresh, but no one has this. I guarantee it. I've never even heard of the company. But they always give good deals. Like whenever HelloFresh says, come on back, here's 50% off, I always take it. It's such a good deal. They bank on you not remembering to cancel your stuff. Do I have to fake like the food? No. I don't even think I have to buy on this one. I don't know if I have to buy or not. But is that something you guys would be interested in if it's a good coupon? Cook Unity? I think that's what it was called. It's like, I should look it up a little bit, see if it's even any good. Cook Unity. Is that it? Chef, yeah, I think that's the one. Has anyone tried it? It looks good. 50% off your first week. So that's the kind of coupon that I can get behind. 50% coupon or no? Cook Unity's pretty good. Usually the coupons that they give us are really good on these food ones. If it's something you guys are interested in, I'll do it. I don't even think I have to spend time on stream. It's just usually like a coupon code or something on the screen. I haven't accepted the contract yet. Coupon goods. Well, they're all subscription based. You just have to cancel your subscription after the first week. Meals look small. I don't know if HelloFresh appreciated me the way I promoted their product. I can sack it. You don't remember? The sultry sponsorship? They can have BOGO deals all the time? That's pretty sweet. I'll look at it. See what kind of coupon code they give us. You should spend the $300. That's another thing. I don't think I will join the race. I want to, but that doesn't... I want to reward you guys with a ring. I feel like I'm obviously going to win. Just kidding. I'm not that good. But... I don't want to be a part of the... I'll be a part of it as far as at the end of the month. It's like right now, let's look how much profit we have in the account. For the ETF, me and the Ask ETF viewer funded retirement fund, which looks like I'll be retiring in the year 3179 the way this is going. All right, let's see here. Let's see what we're at on the month. The new rule is I will match the profit we've made in the month at the end of the month. So basically all our sold positions. So we're up $220 this month. I will match that. So that's how I'm in it, is I'm having to throw money into it at the end of every month. But I don't want to compete because I don't want to take your ring. I want one of you guys to have it, even though it's sick. If it looks the way we hope it looks. Chat versus SJ. That wouldn't even be fair. I've got to fix this. Let me fix this. Yeah, no, that ain't gonna work. Better? Nope, that one ain't it. Nope, that ain't it. It's better. MC. NVIDIA partnership. That's the rumor. Yeah, we'll see about that. See if they can pump it, though. I'm behind a good pump. Oh, yeah, pump it, baby. Got into the 30s there for a second. All right, I gotta be. Oh, there it is. Dang it, there it is. This is Beta Check giving it to us. Missed it. I missed the meat. Oh, and the dumpage. We gotta be green. All right, we're green at least. Oh! 40? 50? Deployment of the Autonomous Police Patrol in Global Village. Well, I made $100 off of that, whereas if I held 5 seconds longer, I would be up 600 to 800. Fantastic. Hopefully you all did better on that than I did. Another reason why you should have a news source. That was Beta Check with Benzinga. Yeah, we're up $220, and that's with a couple 3 purges. I think we had 3 purges out of the ETF, me and the Ass ETF Viewer Funded Retirement Fund this month. Jesus freaking nene. What is the unrealized? Minus 100. You got to realize, like, we've got some dogs in here. Wait a minute. Oh, there it is. We got these two that's $50 by themselves. Yikes, Wang. You're going for the intraday 100 hit. Oh, look at LAC. Oh my gosh, it'd be up $3,000. Oh, this is disgusting. It could have gone. You're right. It should have. You were up quite a bit on it. 950 is the level on this LAC. Let me email that dude. Where is it? There it is. Okay. I've emailed Kevin. Wait. Let's see. On the high day, low day list, why are some highlighted? That means it's 52-week high or 52-week low. So if you see that the red highlight, that means it's 52-week low. This one is like a 52-week, 52-week high, 52-week low. Well, that didn't do much. Still playing. It's still holding the 90 MA on the 5-minute. We got Jay Powell today at 12:20. Is it gonna go? Maybe not. Of course not. Why would it go? Fubo? It's a name I haven't played in a while. Yeah. It's really tight. It's too tight, if you know what I mean. TMQQ, trying to get that 1062 level. ASTS, what are you doing? Jeez. Wow. IDAI hit my alerts. Not really sure why. STI is getting up there, boys. 5 minute on that one. BITF. Some of this. What was the ETF IPO we had today? RPGL. Energy play. Incorporated in the British Virgin Islands. Republic Power Group. Oh, so it's not power. It's software. Prepackaged software. Bookrunner is Bancroft Capital. I don't remember that one. Priced at $4. LAC. Son of a bitch. You do understand that I sold that this morning at $7.90. It is up $2 almost from that sell point. Scheduled for noon, thank you. This one hurts bad. Like I really had this one. I rode this one down on Friday. I was down $2,000 on it. Then yesterday I was a green on it, couldn't sell. I mean, I could have, but I couldn't because banks were closed. And my funds weren't settled. And today, absolute juice monster. The website? Okay, thank you. Let's check this thing out. See how generic this thing looks. Yeah, pretty basic. This is their investor relation page. You know, events 1, 2, and 3. They're not even trying. Get started. They use the same picture here as they did here. Integrity. Oh, I bet, bud. So no list of anybody on here. No CEO, this who works for us. Contact us. What does that do? Contact us button doesn't work. Oh, geez. They didn't even try on this one, man. How does this shit get approved to get listed? Like, very basic stuff here. Greer China. Market's juicing. Like, how does stuff get approved? I just don't understand it. It's like they don't even try to hide. They had AI build that in about 5 seconds, tweaked it maybe, and that's it. Like, how? I want to meet the approval people, the people that approve this stuff, and it says, yeah, okay, that's a legit company. You can get listed on our stock exchange and go ravage the investor. I want to meet these people that approve this shit. What am I at? 951. Not really liking that push here. Oh, come on. Oh, come on. Ugh. Market just took a RAAQ. Damn it, E-Train. RAAQ. Back play. Rare Earth. Yep. Count me in. Short rares on Greer. You think? He's had staff talking with China yesterday in Washington. Hard to find an off-ramp for them. Oh, great. Right as I get into a rare earth play. We're talking hardball here. NAK juicing. They're going to tank the market, aren't they? More tariff talk. Grant says November 1st tariffs depends on what China does. Trade rep. There's more. China tariff could happen sooner. As Trump said. So there's good news in this headline? TD. Back to red on the day. QMS coming back up.
Here's my monthly Bezos bucks dono. Thanks as always, SJ. May your gains be juicy, your losses negligible, and your YOLOs legendary.
That's what I'm talking about, Riley. 42 months. That's what I'm talking about. ETH crossing some roads here. J Powell, what did I say? 1220? Yeah, 1220. Dude, ASTS, an absolute animal. AMD starting to go. You're good, Supersteve. Squeezing now. Squeezes on. Squeezes on. Squeezes on. Okelo over yesterday's highs. 75.90. Let's look at some of these LXC 5-minute 55. Anthropic, Salesforce partnership expansion. Markets are straight juicing right now. Walmart. It looks so good. I don't know what's going to set it off, though. It's just ranging right now. Squeezing. Guess there is a difference. Warrant induced transaction for $7 million. What's your actual? Where's your money? I guess up. It won't. Usually, I feel like whichever way the markets went last time is what the way the markets would go this time. He's not going to change his stance in a month or less than a month. So they probably go up. Wow, and you kick a high a day. It's random. I don't have anything I can trade right now. APLD. Looking for stuff. QMS 5-minute. Yeah, it's actually good, man. It's got like that 22.19. High days up there at 23. Why did the spreads go 50 wide out of nowhere? He said jump. $50 wide again. This is a tough one to exit. It's a good trade, but geez. Like anytime it got close, it's just like, nah, 50 wide. That might have gotten a screen on the day. Nice work, Tim. Good find. APLD, that was a dip and rip there. Jeez, this thing's getting crazy. What's this? Oh gosh. Yuck. Thing's a beast. Or is it going? Ew. I mean, this is a 7 billion share float, so I don't expect it to be like a rocket ship here. But man. I'm in it, Anthony. I have it in the swing account. So this is actually where I bought it at. Five minutes left on that absolute banger of an IPO today. Size, use it, cheese. I was actually thinking last night, I wonder when my swing account will outdo my day trading as far as P&L. Because I am sizing up in this account. As long as I don't stop. I wonder when. AQMS. There's the juice. Oh, I wasn't paying attention. That was nice. Jeez, it's in the swing account already. I can't take much more. I don't have the settled funds for it. That's all I could take. 100 shares, $10,000 position. Pre-market highs. What were they? It's getting there. It's got to fight with some levels. It's on its way though. Looks good. Speaking of looking good, this APLD super strong. Taking options? No. No. I ain't doing options on an account. I mean, I might sell them to get in a certain kind of position if I wanted. But that's about it. Oh. A buck away from juice. Juiced them. A buck away. Bought some crypto. I don't know if I said that out loud. I got ETH. What did I get? ETH and XRP. No soul. I was just going with ETH. It's been super strong. I didn't like the soul chart as much. And this is just a bounce. I don't know if bottom's in or not, but it's just a bounce play. Litecoin? Rattle. What's that? Retail bull 3x. What? Huh. UGE. How do you know all these random ass tickers? Been in the game a while, and you just put out ones I've never heard of a lot, nor keep track of for that matter. 60. SBLX digital strategy deal. And I'm getting blown up. What's the deal? BitTrust will serve as institutional custom grade custodian. Oh, thought this was an investment. Get over this 50. Should have gone. And back to red on the day. AQMS trying again. This is a W. No, it's not. It's not. TS. If you can, Walmart size. You think there's an edge in swing stocks that have huge sweeps and options that are close to expiration? Feel like there's. So I'm not the greatest when it comes to option strats like that to take notice of, big option moves. Certainly there's something behind it. I don't know how they all affect. Maybe someone else can chime in on that, Kobe. Long data calls. See what we find. Big move there. Here's your pre-market levels here, Tim. 25.82 on deck. $25 is trying to hold right now. It's 47. Looks like it's going to test 25, yeah. Kind of a bullshit fill, but okay. I'm used to that. Here's the cuck. There's the dickery. Oh, I was waiting for it. $25.44 juices. $25.44 and it juices. That hit 20. There it goes. Oh. Jeez, the spreads. They'll eat herd. You piece of shit! All right, let's do. We're green now, boys. We're nice. We got a comfortable green move now. Green leg baby shit. That's right. Hey, speaking of green, RPLG halted up here, boys. We missed it. When's the resumption here? Like soon? It's a 10-minute halt. For what, Time Tanker? Quoting $6. Yeah. Nice work, Tim. See, this is why we got a community of traders. There's no way in the world I would have been paying attention to AQMS unless Tim called it out. And that, for that matter, anybody. This is, I look at all the, any of these that interesting, man. In my kind of wheelhouse, I look at it. I can't keep track of it all by myself. Neither can you. We need a community of traders. That's what this is all about. It wasn't even on my radar until he said something. I check it out. Sometimes I like them that you like. Sometimes I don't. Sometimes you like the ones I call out. Sometimes you don't. Walmart went. Well, good. Looks juicy. I don't know what the quote is. 10-minute halt, though. That's true. You can learn other styles by looking at their call outs. But I can help. Didn't follow my own call out. Still down 733 today. Gotta shut it down. That's smart too, Tim. If it ain't working, it ain't working, right? There's always another day. Today has not been that spicy. It's it's like 50-50. It's not a good trading day. Yesterday was a good trading day. You know, that day that I had to sign off early? Yeah, that was a good trading day. Today, slow grind down. So it should be opening soon then, right? 420. So it's gapping down now. 10 don't, I'm not touching this. 10:29. So five or so seconds here. Thank you, Zabim. If it's opening a gap down, there's no chance in the world I touch this. Yeah. These people that freaking run this shit don't know how to run an IPO. I'm sorry. You put me in charge of it, your stock's going to $50 first day. You dicked your first halt. You dicked it. Your first halt gapped down. You think people are going to be wanting to push this into a second halt? After 10 minutes, it gapped down. I mean, you dicked it. You need 50 by lockup. These dudes are straight up. There is no lockup. I bet you they have a deal with their book runner. Be like, listen, we're going to give you all of the shares because you're not locked up, but we are. So we're going to give you all of them. And it's your job to sell them. And then you're going to come back to us. You're going to give us some money. Okay? That's what you're going to do. We made a fake website. Looks awesome. Dee-doo. ASTS still juicing too. Sorry, I was muted. APLD has a 5-minute level. MACD is still down. Salty stock skipper, stop buying that shit. Yeah, APLD. It's got a 5-minute. I don't like the MACD right now. I feel like it could break this or even hit the upper Bollinger Band and come back down. So if that flips, maybe. ASTS is super strong. Anyone have a link to that JPAL event? Thank you, guys.
To the National Association for Business Economics for the Adam Smith Award. It, for me, is an unexpected honor just to be mentioned.
Comments out by
Fed
Chair Powell,
including particularly
monetary
my
policy
predecessors, Janet Yellen and Ben Bernanke. So thank you very much for this
US
recognition.
government shutdown suggested growth may be better than expected.
Say,
right now, there's no risk-free path for monetary policy.
It's really been my favorite venue all these years. It's a place.
Eggy cheese.
This is a place where we can talk about economic issues and not worry that someone's eyes might glaze over.
Says data enhanced adjust current
appreciate
economy
the warm welcome
is where it was in September.
Received here.
Rising risk of job market justified September interest rate cut.
For a minute,
Available data show tariff pushing up
group of econ nerds anywhere.
Price pressures.
So this is pre.
So thank you again for this
speech notes that are coming out right now.
And for the opportunity to speak to you here today. So, as we all know, monetary policy is more effective when the public understands what the Federal Reserve does and why. With that in mind, I hope to enhance understanding of one of the more arcane and technical aspects of monetary policy, the Federal Reserve's balance sheet. A colleague recently compared this topic to a trip to the dentist, but I found that comparison somewhat unfair to dentists.
That's a joke.
So today I'll discuss the essential role that our balance sheet played during the pandemic, along with some lessons learned. I'll then review our ample reserves implementation framework and the progress we've made toward normalizing the size of our balance sheet. And I'll conclude with some brief remarks on the economic outlook. So, one of the primary purposes of a central bank is to provide the monetary foundation for the financial system and the broader economy. This foundation is made of central bank liabilities.
Members posted in the news stats is the speech by Fed Powell
totaled $6.5 trillion as of October 8, and three categories account for roughly 95% of the total. First, Federal Reserve notes, that is physical currency, totaled $2.4 trillion. Second, reserves, funds held by depository institutions at Federal Reserve banks, totaled $3 trillion. These deposits allow commercial banks to make and receive payments and meet regulatory requirements. Reserves are the safest and most liquid asset in the financial system, and only the Fed can create them. The adequate provision of reserves is essential to the safety and soundness of our banking system, the resilience and efficiency of our payment system, and ultimately the stability of our economy. Third is the Treasury General Account, or TGA, currently at about $800 billion, which is essentially the checking account for the federal government. When the Treasury makes or receives payments, those flows affect dollar for dollar the supply of reserves or other liabilities in the system. The asset side of our ledger consists almost entirely of securities, including $4.2 trillion of U.S. Treasury securities and $2.1 trillion of government-guaranteed agency mortgage-backed securities, or MBS. When we add reserves to the system, we generally do so by purchasing Treasury securities.
Is this a Zoom call?
Market and crediting the reserve
Are we on
accounts
a
of the banks
Zoom call
involved
here?
in the transaction with the seller. This process effectively transforms securities held by the public into reserves, but does not change the total amount of government liabilities held by the public. So, the Fed's balance sheet serves as a critical policy tool, especially when the policy rate is constrained by the effective lower bound, or ELB. When COVID-19 struck in March 2020, the economy came to a near standstill, and financial markets seized up, when the policy rate to transform a public health crisis into a severe, prolonged economic downturn. In response, we established a number of emergency liquidity facilities. Those programs, supported at the time by Congress and the administration, provided critical support to markets and were remarkably effective in restoring confidence and stability. At their peak in July 2020, loans from these facilities totaled just over $200 billion.
Did we lose Caitlin's?
Most of these loans conditions stabilized. That's normally the deepest and most liquid market in the world and the bedrock of the global financial system.
I can't take that, Lou. I can't take it when it's out only one side.
We used large-scale purchases of securities to restore functionality to the Treasury market. Faced with unprecedented market dysfunction, the Fed purchased Treasury and agency securities at an extraordinary pace in March and April of 2020. These purchases supported the flow of credit to households and businesses and fostered more accommodative financial conditions to support the recovery of the economy when it ultimately came. This source of policy accommodation was particularly important as we had already lowered the federal funds rate close to zero and expected that it would remain there for some time. By June 2020, we slowed our purchase pace to a still substantial $120 billion per month. And in December of 2020, as the economic outlook remained highly uncertain, the FOMC said that we expected to maintain that pace of purchases until substantial further progress has been made toward the committee's maximum employment and price stability goals. That guidance provided assurance that the Fed would not prematurely withdraw support while the economic recovery remained fragile amid unprecedented conditions. And we maintained that pace of asset purchases through October 2021. By then, it had become apparent that elevated inflation was not likely to go away without a strong monetary response. At our meeting in November 2021, we announced a phase out of our purchases. And at our next meeting in December, we doubled the pace of that taper and said that asset purchases would conclude by mid-March of 2022. Over the entire period of purchases, our securities holdings increased by $4.6 trillion. So, a number of observers have raised questions, fairly enough, about the size and composition of asset purchases during the pandemic recovery. Throughout 2020 and 21, the economy continued to face significant challenges as successive waves of COVID caused widespread disruption and loss. During that tumultuous period, we continued to purchase in order to avoid a sharp, unwelcome tightening of financial conditions at a time when the economy still appeared to be highly vulnerable. Our thinking was informed by recent episodes in which signals about reducing the balance sheet had triggered significant tightening in financial conditions, and we were thinking of the events of December 2018, as well as the 2013 taper tantrum. Regarding the composition of our purchases, some have questioned the inclusion of agency MBS purchases given the strong housing market during the pandemic recovery. Outside of purchases aimed specifically at market functioning, MBS purchases are primarily intended, like our purchases of Treasury securities, to ease broader financial conditions when the policy rate is constrained by the effective lower bound. The extent to which these MBS purchases disproportionately affected housing market conditions during that period is challenging to determine. Many factors affect the mortgage market, and many factors beyond the mortgage market affect supply and demand in the broader housing market. With the clarity of hindsight, we could have, and perhaps should have, stopped asset purchases sooner. Our real-time decisions were intended to serve as insurance against downside risks. We knew that we could unwind purchases relatively quickly once we ended them, which is exactly what we did. Research and experience tell us that asset purchases affect the economy through expectations regarding the future size and duration of our balance sheet, so that when we announced our taper, market participants began pricing in its effects, pulling forward the tightening in financial conditions. Stopping sooner could have made some difference, but not likely enough to fundamentally alter the trajectory of the economy. Nonetheless, our experience since 2020 does suggest that we can be more nimble in our use of the balance sheet and more confident that our communications will foster appropriate expectations among market participants, given their growing experience with these tools. Some have also argued that we could have better explained the purpose of asset purchases in real time. There's always room for improved communication, but I believe our statements were reasonably clear about our objectives, which were to support and then sustain smooth market functioning and to help foster accommodative financial conditions. Over time, the relative importance of those objectives evolved with economic conditions, but the objectives were never in conflict. So at the time, this issue appeared to be a distinction without much of a difference. That's not always the case, of course. For example, the March 2023 banking stress led to a sizable increase in our balance sheet through lending operations. We clearly differentiated these financial stability operations from our monetary policy stance. Indeed, we continued to raise the policy rate through that time. Turning to my second topic, our ample reserves regime has proven highly effective, delivering good control of our policy rate across a wide range of challenging economic conditions while promoting financial stability and supporting a resilient payment system. In this framework, an ample supply of reserves ensures adequate liquidity in the banking system, and control of our policy rate is achieved through the setting of our administered rates, interest on reserve balances, and the overnight repurchase rate. Reverse repo rate, rather. This approach allows us to maintain rate control independently of the size of our balance sheet. And that's important given large unpredictable swings in liquidity demand from the private sector and significant fluctuations in the autonomous factors affecting reserve supply, such as the TGA. This framework has proved resilient whether the balance sheet is shrinking or growing. Since June 2022, we've reduced the size of our balance sheet by $2.2 trillion, from 35% to just under 22% of GDP, while maintaining effective interest rate control. Our long-stated plan is to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserves conditions. We may approach that point in coming months, and we are closely monitoring a wide range of indicators to inform this decision. Some signs have begun to emerge that liquidity conditions are gradually tightening, including a general firming of repo rates, along with more noticeable but temporary pressures on selected dates. The committee's plans lay out a deliberately cautious approach to avoid the kind of money market strains experienced in September 2019. Moreover, the tools of our implementation framework, including the standing repo facility and a discount window, will help contain funding pressures and keep the federal funds rate within our target range through this transition to lower reserve levels. Normalizing the size of our balance sheet does not mean going back to the balance sheet we had before the pandemic. In the longer run, the size of our balance sheet is determined by the public's demand for our liabilities rather than by our pandemic-related asset purchases. Non-reserve liabilities currently stand about $1.1 trillion higher than just prior to the pandemic.
Nice 5-minute W there.
Our securities holdings be equally higher. Demand for reserves has risen as well, in part reflecting the growth of the banking system and the overall economy. Regarding the composition of our securities portfolio, relative to the outstanding universe of Treasury securities, our portfolio is currently overweight longer-term securities and underweight shorter-term securities.
That was nice.
The longer-run composition will be a topic of committee discussion. Transition to our desired composition will occur gradually and predictably, giving market participants time to adjust and minimizing the risk of market disruption. Consistent with our longstanding guidance, we aim for a portfolio consisting primarily of Treasury securities over the longer run. Some have questioned whether the interest we pay on reserves is costly to taxpayers. In fact, that is not the case. The Fed earns interest income from Treasury securities that back reserves. Most of the time, our interest earnings from Treasury holdings more than cover the interest paid on reserves, generating significant remittances to the Treasury. By law, we remit all profits to the Treasury after covering expenses. And since 2008, even after accounting for the recent period of negative net income, our total remittances to Treasury have totaled more than $900 billion. While our net interest income has temporarily been negative due to the rapid rise in policy rates to control inflation, this is highly unusual. Our net income will soon turn positive again, as it typically has been throughout our history. Of course, having negative net income has no bearing at all on our ability to conduct monetary policy or meet our financial obligations. If our ability to pay interest on reserves and other liabilities were eliminated, the Fed would lose control over rates. The stance of monetary policy would no longer be appropriately calibrated to economic conditions and would push the economy away from our employment and price stability goals. To restore rate control, large sales of securities over a short period of time would be needed to shrink our balance sheet and the quantity of reserves in the system. The volume and speed of these sales could strain Treasury market functioning and compromise financial stability. Market participants would need to absorb the sales of Treasury securities and agency MBS, which would put upward pressure on the entire yield curve, raising borrowing costs for the Treasury and private sector. Even after that volatile and disruptive process, the banking system would be less resilient and more vulnerable to liquidity shocks. The bottom line is that our ample reserves regime has proven remarkably effective for implementing monetary policy and supporting economic and financial stability. So I will close with a brief discussion of the economy and the outlook for monetary policy. Although some important government data have been delayed due to the shutdown, we routinely review a wide variety of public and private sector data that have remained available. We also maintain a nationwide network of contacts through the reserve banks who provide valuable insights, which will be summarized in tomorrow's Beige Book. Based on the data we do have, it's fair to say that the outlook for employment and inflation does not appear to have changed much since our September meeting 4 weeks ago. Data available prior to the shutdown, however, show that growth in economic activity may be on a somewhat firmer trajectory than expected. While the unemployment rate remained low through August, payroll gains have slowed sharply, likely in part due to a decline in labor force growth due to lower immigration and lower labor force participation. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. While official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue their downward trajectories.
Through the 50 and through
12-month core PCE inflation was 2.9% in August, up slightly from earlier this year. As rising core goods inflation has outpaced continued disinflation in housing services.
Okay, aloha day.
Available data and surveys continue to show that goods price increases primarily reflect tariffs rather than broader inflationary pressures. Consistent with these effects, near-term inflation expectations have generally increased this year, while most longer-term expectation measures remain aligned with our 2% goal. Rising downside risks to employment have shifted our assessment of the balance of risks. As a result, we judged it appropriate to take another step toward a more neutral policy stance at our September meeting.
Dancing monkey. Okay,
there is no risk-free path for policy as we navigate the tension between our employment and inflation goals. This challenge was evident in the dispersion of committee participants' projections at the September meeting. And I'll stress again that these projections should be understood as representing a range of potential outcomes whose probabilities evolve as new information informs our meeting-by-meeting approach to policymaking. We'll set policy based on the evolution of the economic outlook and the balance of risks rather than following a predetermined path. And with that, thank you again for this wonderful award and for inviting me here today. I look forward to our discussion. Thank you.
No, buddy. Man, this audio is so bad. Bunch of billionaires in a room, and no one can freaking get audio right.
Thank you, Chair Powell, for the Excellent remarks in the Adam Smith address, and we will have about half an hour for questions. So
Sounds like a long
should
time.
have talked longer.
And as soon as I get out, I held it for 2 minutes.
So let me start with, before I go to some of the questions coming in from the audience, and do use the Connect app to generate those. You have said, and you repeated again here, that there are no risk-free paths for the Fed now. So in light of that,
No, but they can pay people that know what they're doing.
with where the recent inflation data are running, let me group this with some of the questions that we're seeing coming in on the app as well. Obviously, always data dependent.
What is she talking about?
But thinking about the dual mandate of maximum employment and price stability,
Or KLB near
how
High Day.
concerned are you that if the rate of pass-through of tariffs is slower, that might begin to look like more persistent inflation, as opposed to a one-time, as if the tariff adjustment came through all at once, and then it would be quite clearly a one-time price level shift?
So that's certainly a risk. As I mentioned, there really isn't a risk-free path now, since it appears that inflation is certainly is running above our target, and appears to be continuing to increase quite gradually, but increase. It's still on the way up. So there's a risk there that would lend to greater persistence. But now the labor market has demonstrated pretty significant downside risks as payroll jobs have declined, and both the supply and demand for labor has declined quite sharply. So those two states of affairs for our two goal variables call for different monetary policy responses. So as they come more into balance, I think the idea has been that policy should move from being tight to some degree to being more neutral as those two things balance out. But it is clear, though, that if we move too quickly, then we may leave the inflation job unfinished and have to come back later and finish it. And if we move too slowly, there may be unnecessary losses, painful losses in the employment market. So we're in the difficult situation of balancing those two things. I think for the last few months, we've been able to maintain a restrictive stance because the labor market was still pretty solid.
Powell says if the Fed moves too quickly, it may leave the inflation job unfinished.
Which adjusted back all the way through May, showed that the labor market has actually softened pretty considerably and puts us in a situation where the two risks are closer to being in balance.
Let's move to the other risk then and talk about employment a little bit. We had Anna Paulson here yesterday, and she spoke about the break-even unemployment or break-even employment growth rate, and that's a question from the audience as well. So I believe she said that it's certainly lower than it was, and the standard error around those estimates probably includes some numbers that might even be negative. Where do you see the monthly break-even employment growth rate at this point?
I'm not going to try to give you a pinpoint number, but as you pointed out, the standard error around these things is 50,000 plus or minus, something like that. And that would certainly, I think the range of plausible numbers for the break-even rate is probably does go below zero, accounting for those standard errors. It's clearly come down a great deal, and that's what's so challenging about this is that both supply and demand in the labor market have come down so sharply, so quickly. And the fact that the unemployment rate has barely moved is kind of remarkable in and of itself, and suggests that they're moving at roughly the same pace. Although, of course, the unemployment rate has ticked up, which suggests that demand is moving a little faster than supply. I wouldn't want to point to a specific number other than to say that it's come way down.
Trade exchange, I know. Trade exchange doesn't complain about it, so you're going to get the occasional estimates, whatever.
We're certainly in a volatile and changing environment. So one question I have is whether you see any changes in the transmission mechanism of monetary policy actions. So when we speak of long and variable lags, as we do, are those changing? And in particular, do you think there might be any difference in the impacts of policy on inflation versus employment?
Yeah, I don't know which
is one changing more than the other.
None of this is probably
questions, so I might have to come back to you. That's right.
His speech probably was all
on transmission. There, in theory at least, I see two things. One is, what we say and the actions that we take on monetary policy and how quickly that gets into financial markets. So if you go back to when I was in college, that part would have taken, weeks, months probably. And now that part happens essentially instantaneously. But the rest of it, once it's in the financial markets, how quickly does it affect economic activity, unemployment, employment, inflation, et cetera? I think that's more dependent on the conditions in the economy. For example, if you take the group of people who had extremely low rate mortgages, right? And even so, if you can cut rates, but they're a long way down, and they're sort of in a place where it's going to be expensive to move and to take out a much higher rate mortgage, even assuming significant numbers of cuts. So that has probably blunted the transmission of lower rates into that part of the economy. But overall, I think it still works the way we think it works, which is, long and variable lags means a lot of uncertainty about how it's being affected. I think the last part of your question, the lore has been that inflation and employment come later. The first decisions are purchasing decisions, hiring decisions, and things. Well, purchasing decisions, can be affected probably more quickly, but then those would eventually affect employment and inflation. So longer lags are when the research generally shows longer and longer lags for employment and inflation.
And I guess the variable part of that comment does give us a bit of cover.
A lot of uncertainty.
So you spoke about the adjustments or the challenges that you're facing with some government data not currently being published. Beyond the headline unemployment rate, which we're not going to see right away, what other labor market indicators are you monitoring most closely to gauge that side of the mandate?
So I think everyone's looking at the same non-government data. So there's a set of non-government data around, or non-federal government data around labor markets. For example, state level unemployment, claim reports. You can add those up and get a pretty decent estimate, and that's a really good one. There's also ADP has its data and employment. So in the employment space, there's some plausible data. I will say generally,
I'm really shocked that the ETF mini has ETF viewer funded retirement fund is
better used as a supplement
not getting some juicers today.
Underlying governmental data, which is the gold
Maybe it's just all large cap
and
moves.
it's not it won't be as effective.
That would make sense. Some of the plays that we had into the 100% club were large caps or mid caps.
To replace the data we're not getting.
And most of these are.
So I think in job
shitters,
in employment space, there's some pretty good substitutes. Less so in inflation space. And in economic activity space.
Yeah,
and also they're just, there are different private data providers use different universes and different levels of rigor in their data analysis. So, we're looking at lots of things, and we're going to make our decisions
job numbers that they are.
According to
I don't know. I think it would just
schedule.
be the normal.
But I think
schedule,
it will be a lot better once we start getting, for example, the September employment report is going to be a very important report, and we're not on track to have that. There would still be time for us to get that. We will get, of course, the September inflation, the CPI and PPI reports. So that's a positive. But we don't comment on fiscal matters, but from our standpoint, we'll start to miss that data, and particularly the October data. If this goes on for a while, they won't be collecting it, and it could become more challenging.
You used the term gold standard, and you didn't mean it in this context, but I'm going to pivot here because there's a question from the audience that's getting a lot of upvotes. So one of your predecessors, Alan Greenspan, used to view the price of gold as an indicator of inflation risk. So in that context, how do you view the rally that we've seen in gold? And if you want to throw in Bitcoin, comment on that too.
I'm not going to comment on any particular asset price, including that one. And I think we think of inflation as driven by fundamental supply and demand factors, and it's not something we look at actively.
Fair. The September projections, we saw revised GDP growth projections revised upward for both 2025 and 2026. Now, sometimes it's just an issue to issue thing, but how do you reconcile that projection of stronger growth with what we're seeing in terms of a likely weakening labor market?
So even subsequent to the September SEP, we've seen economic activity data which are surprising to the upside. And as I mentioned in my remarks, so you do have a bit of a tension there between the labor market data that we see, very low levels of job creation, and yet people are spending. So economic activity is strong, and it's we're going to have to see how that plays out. Right now, of course, we're not getting any new government data on that, any new federal government data on that, but it does create, of course, if economic activity were stronger, then that would tend to support labor market activities and hiring. So we'll have to see how that works out.
Another topic that has permeated the conference over the last 2 days has been AI. So as the Federal Reserve, like all of us, grapple with the implications of generative AI, what plans are in place to assess its long-term impact on productivity, implications for labor markets, and overall economic stability? And does that present any new risks to monetary policy or financial stability?
So you're right. We're doing what other people are doing, which is reading all the things that, so many researchers are working on AI now. It's just amazing. And so we follow all of that. We also have people at the Fed who are doing lots and lots of research on AI. And, in terms of, it's just such early days to be looking for the kind of things that will happen. So, the question of productivity, it was Robert Solow who said that technology is showing up everywhere, but in the productivity data. So this could be the same kind of thing where it's there, but it takes a long time kind of to show itself, because you would think of another big technological advance as potentially raising productivity, but I think it's early to say that we're seeing it. Also, you're seeing, I think some researchers have found effects on hiring from AI for entry-level people and for coders and things like that. So there's probably some of that out there, but it's just so early to say what it will be. We also monitor very carefully what public companies are saying. Increasingly bold statements from mainly large private companies on things that they think they can do across their whole business area with AI, and either sort of freeze hiring where it is or reduce hiring. And I think we're pretty aware of what the potential outcomes are, but the range of potential outcomes is very broad. I will say, in terms of what the Fed can do, we deal with supply and demand. We have an interest rate, and we also do regulation, that kind of thing. But if what's needed is greater education and skills, I've always liked the model that technology can work for everybody as long as everybody's getting the skills and aptitudes they need to use that technology. This is Golden and Katz, their work, which they actually spoke about at Jackson Hole this year, but it's a 20-year-old book that they wrote. So we can't do that. That's not something the Fed can do. We also can't address the potential societal disruptions that could happen, potentially, if there's really significant job loss. So there are a lot of, we're the least of it. There are potentially really significant implications for people in the labor force. And I think we're all speculating about what those might be, but it's only the beginning of this story.
Yeah. Looking at some of the other questions that are getting upvoted, and you can get as far into the weeds as you want, but this is where people want to go. So let me try this one. As you think of the appropriate level of reserves in the system, what indicators are most important? Is it the price of money, so repo levels, or the volume of borrowings from the Fed, like the discount window, and so on?
So we have a nice spider chart and 5 main indicators, one of which is sort of repo levels. And I think overall what they're showing is that we're still at ample reserves. Abundant reserves. We're still at abundant reserves, meaning above our goal of ample reserves, a little bit above ample reserves. So But we're beginning to see, you're starting to see a little bit of tightening in money market conditions, particularly repo rates have moved up. And those are the things we're going to be watching. So we think we're still at abundant, and we're, the pace of runoff is now very, very slow. So we're going to be watching all those factors very carefully. And we're not so far away now, but there's a ways to go.
I think we're not going to get away without addressing this one. So I'll try to, again, group some of these together. First, there's definitely appreciation from the audience, your ability to try to remain above the political fray. And I think also, and as in your remarks, you said gradually and predictably, and that sounds really nice right about now.
Powell says starting to see a little
with that ongoing scrutiny of the policy decisions
in
of the
money
Fed,
markets.
What measures is the Federal Reserve taking, and are you taking, to ensure and demonstrate the continued independence in setting monetary policy?
So the main thing we can continue to do is to do our work the way we've always done it, which is, think really carefully about evolving economic conditions and the evolving outlook and the balance of risks, and try to make good decisions to best serve the American public, and then explain those decisions and talk about them in a way that makes sense and is grounded in the data and our overall approach. I think we're going to keep doing that, and as long as we're doing that, people will be able to tell. If we start doing something else, I think people will be able to tell that too. But that's just not something we're ever going to do. We're always going to keep doing our work. We don't engage in back and forth with people. It's just not that gets to be political sort of right away. So we just do our work and do it as best we can. I mean, overall, I would say the Fed comes through the last, if you think about it, go back to the beginning of the global financial crisis. We've had two world historical crises back to back, essentially. And the U.S. economy, it's been quite a ride for the U.S. economy and for American citizens, but we've come through it as well or better than any other country in the world. And we had to innovate and did innovate. There was really no choice. We can look back now and as I did today and second guess ourselves, which is only appropriate. That we've been doing it for 10 years. Since I got to the Fed 12 years ago, we were already doing a lot of that. So that's an ongoing process. But I think if you take a step back, the Fed isn't a government agency that does a good job for the public that it serves. And that is our only goal. And I think we do it pretty well. Don't look for perfection. These are close calls that have to be made in real time. But I guess that's what I would say.
It's fantastic. And in that context, then internally to the FOMC, how important is it that you have consensus on it? I mean, we're economists. We understand the value of spirited debate, but is that important in terms of communicating the results and the decisions of the committee?
I mean, consensus is great, but I mean, the most important thing of all is to get it right. And, that you come to places, not very commonly, but sometimes you come to places where people are going to have different views. And this is one of them. You have a situation here where literally inflation's above target and gently rising. The labor market is subject to pretty clear downside risks. What do? How do you think about that? That's not a problem that you face very often in central banking or in the economy. And people are going to have different weights and different risk aversion and different risk appetites on those things. It would be kind of surprising if you had no debate over those things. So we have a healthy debate going. I think it's very healthy. I think the meetings that we've been having are as good as any we've had, in terms of people sincerely, giving their absolute best argument for their positions, but they're different positions. That's, I mean, when I was an investor, I always felt like the most dangerous thing is if everybody agreed on something, because you need someone to come in and try to explain why this is a terrible idea. Hopefully somebody really smart. And that would give you the ability to really test your thinking. So I think that's a healthy discussion that we're having right now. And I'm not at all surprised that we have people across the board. I do think we also, as an institution, do try to come together around a central answer, and that's of course part of what I try to do is find an answer that will attract as much support as possible.
Absolutely. I know you probably won't want to comment in great detail on global conditions, but there are a few questions around that and what that implies for U.S. monetary policy, and also just looking at the interest rate differentials between the U.S. and other advanced economies, and how long that could persist, and is there a risk there?
Sorry,
the interest rate differentials between the U.S. and other advanced economies.
Yeah, I mean, we set interest rates according to, the place where our economy is domestically, taking into account the international aspects of our economy. So again, it's not surprising. I mean, you could name many, many factors, but, for example, tariffs are clearly more disinflationary for countries that are subjected to them, and they're more, I won't say heavily inflationary, but there's some inflationary pass-through to consumers from countries that are putting tariffs on. So there's a very different monetary policy response potentially just in that. I think we need to set, as every other central bank does, they're setting rates in whatever their remit is geographically, and they're going to be different answers. It's not unusual.
So we have a large number of young economists in the audience today. Could you talk a little bit about, as we look back, and it's a momentous award, it's a nice time to reflect. If you looked back on your early career and your early goals, how do you think that young Jerome Powell would view where Jerome Powell is sitting today as chair of the Federal Reserve?
Surprised. No, I would say, so what I would tell young economists is you've chosen a great profession, a tremendous profession. You're getting the tools to analyze public policy and what works and what doesn't work and what should be expected to work and wouldn't and why. And also what's the state of the economy. And guess what? It's not just hard, it's basically impossible, but it's a very, very difficult thing, but it yields itself up over time. And it's just an incredibly important subject that carries the capability to do really good things for the general public, who may not feel great gratitude toward economists, but sometimes. But no, it's really important. You've made a great choice, and I would say wish you the best of luck.
Thank you. Agree. Okay, we'll do a little bit of a lightning round here. We have about 5 minutes left, so I'll ask a bunch of questions that you may not want to get into great detail on anyway. Yeah. Some of these are pretty straightforward, but so we talked quite a bit about labor markets, but we have not specifically asked the question about the effect of immigration policies on labor supply. How restrictive do you think that current policy is, and is that something that will just
current immigration policy?
Yeah.
Yes. Let me start by saying that we don't have a view on immigration. It's not our job to have a view. So we take that as completely, it is what it is. We take it as it arrives. More, I'd say, stronger policy than most people had expected. We've seen a very sharp decline in growth of the labor force and in people entering the country, and yeah, I think you're only beginning to see the strength of that policy too. There's more expulsions; those are rising, and that kind of thing. So yeah, that's a big economic factor. So that will mean fewer people to work. You have anecdotal evidence of industries that are just having a hard time finding people. You don't see it in wages or anything like that at this point. You don't see, at least in the aggregate, you don't. But yeah, it's going to be a really important economic fact because that's new people who come into the workforce. They create their supply, but they also create demand. They create their own demand. And again, from our standpoint, we're just our job is to achieve maximum employment or maximum sustainable employment. And that will depend both on the
remember some
supply of
commentary out
workers
by
and the
Powell
demand
regarding
for
wages.
workers.
It says Fed Chair Powell, there is anecdotal
Back to
evidence
the
of
balance
industries
sheet,
struggling
some
to find workers,
questions. Again,
but
I'll
it is
kind of try to
not
group these
showing in
together
wages
around
yet.
mortgage-backed securities and
Well, not against
housing
that.
affordability. Again, not directly part of the dual mandate, but would the Fed ever look at any specific actions with regard to MBS to address mortgage rates or affordability for housing?
The answer is, look, we look at overall inflation and we don't target housing prices. And also I don't know how you would, we would certainly not engage in mortgage-backed security purchases as a way of addressing mortgage rates or housing directly. That's not what we do. We do have, as I mentioned, a very large amount of mortgage-backed securities, and they're running off, but they run off pretty slowly.
Fair. Question on the beverage curve. Maybe that's not a lightning round question, but let's try it. So do you think that the shift in the beverage curve is a structural shift or just a blip?
Intel, big
I
pop.
think it's, you're at a place where, further declines in job openings might very well start to show up in.
It's a big
I
pop.
agree. Intel, INTC, Intel is revealing a data center GPU. Shares are seeing increased
I just think
activity.
you're going to reach a point at which unemployment starts to go
Data
up.
center
And we
GPU.
haven't really, we may be hitting that now, but it's been remarkable how that line, it just comes down.
Interesting. They don't
And,
have, that's a GPU, not CPU.
which has been,
Those that didn't hear in the
really a
back.
great part of the recovery.
Where are
Alright.
they announcing that at?
Well, we have just a couple minutes left. I think we'll
Horseshit, Phil.
we'll end with maybe another sort of philosophical question. Michael Barr spoke to the policy conference in 2024, I believe it was, and he gave some advice to economists. What would your advice be to the economists in the room in terms of how we can best serve the challenges that are facing us collectively in this moment?
I'm inclined to say keep your heads up.
Reports
It's
Intel
a
has
time
revealed a
when people are
160
challenging
gigabit energy efficient
expertise.
data center GPU.
And, I think it's a distinguished profession. It's a very high order profession, and you should be proud of your work and keep at it. Ultimately, we're learning about how the economy works and how society
Intel plans to
works.
start sampling with customers
our
second half
understanding-
of 2026.
Certain, really, still
jeez.
after all these years.
It's a ways away.
You got to think we're
at
making
that.
some progress and doing
A
some
minute
good,
apart, filled it
and
to the
imposing
exact.
sort of an analytical framework
What
around
is
the
that,
kind of decisions
millionth?
people make about the economy.
10
So I
times
just
thousand.
want
No, it's,
to give you a
that
very
I don't even know what that
say
is.
keep at it.
10,000s.
And likewise, NABE
To the
supports
10,000s?
you.
Some horse shit right there. All right, he's done.
Are we done?
No, we're done. Scroll up the trading box. It's at the top. That's the last trade right there. Some horse shit right there, boys.
Commentary out by Axios says Glue raises $20 million to defeat Slack.
Blue Mobile. This is the Intel chip. Crescent Island.
More color on that. Axios says Glue, an aspiring Slack killer, co-founded last year by White House AI czar David.
So sampling their GPU in the second half of 2026. You know what comes out in 2026, maybe early 2027? I guess the release in 2026. It's going to be NVIDIA's next generation GPU. Yeah, but you go ahead and tell me Intel's better than NVIDIA or AMD. You go ahead. You go ahead. I have a line of sight to get to the beers on MeTag. Hey, nice work, Lou. We haven't reset that in forever. I'm waiting for, and I need to remind Marty. We used to do it every week, but it was like easier because the Discord was smaller. Now our Discord's huge, and then we turned it to every like month, and I don't even keep up with it now. What is it? What is the beer list now? We need to automate it. That's the problem. To be able to wipe the beer list clean every time just by a simple click of a button or something. Can I just do it? Hang on. Maybe there is an easy way to do it. Okay. Diamond hands. Manage members. Oh, I could just click them all off. I could do that. Why didn't I think of this sooner? I'm a freaking idiot. I mean, it's like 40 people, so it's like 40 clicks, whatever. I could do that. I'm an idiot. Oh, you're catching up on old admin jobs. A new Guac, you know what? Punch yourself right in the balls. All right. Sick of this. Sick of your slutty mouth. Right in the nuts. Can you put train on? Let's go. Shadow, let's go. Welcome aboard, my man. How'd you find a Shadow? I love new subs. Love them. Love them. Feed picks for all when new subs show up. Cons. That's a special moment, cons. That only happens when level 5 hype train is achieved. Shut up, Wolvie. Also punch yourself in the nuts. This thing is juiced. G-Wave getting its shit kicked in. Your full port QSI. Nene, don't you start with me. Don't you freaking start with me, Nene. LIDR? Take a look at LIDR. You know, it's got a lot of consolidation around that $3 level. It survived. Jeez. I mean, you held the 90 EMA on the daily. $3 psychological. I'd say under 3 probably be bad, but over 3 looks pretty good, especially daily cock now. Anthony, you mentioned that earlier. SPCE. Stormidon's in this one. And the ETF me in the ass. ETF viewer funded retirement fund. Sinful Jason, it won't be cleared. I'll probably do, when we start the competition, I'll probably do it in a clean account, though. Just to track it easier. Or maybe not. It's not that much different. $351. What are we talking about here, Cheese? I just checked the muff. There was nothing there. $350. Okay, but what are we full porting here, Cheese? I get your number, but what are we full porting? Check route. 351.6. That's insane how low that is. Printers go burr. Is that what we're thinking here? In the Food I Ate channel. What? Why would you do that? Peaches in the Food I Ate channel. Scared to go in there and look. Okay, it's literally peaches. What we got in here? Chicken salad sandwich with capers. A little clearly Canadian. I love this bottle. It makes you feel like you're drinking something healthy when it clearly is not. Oh, who are you and where are you? Looking at the wood. Fruitious. Okay, okay. Oh, peaches and apple. Now this looks delicious. Is that pepperoni? Okay, okay. It is, okay. Wood cooked chicken with kale and something. I don't know what the hell that other thing is. Avocado toast. I've never had avocado toast. I don't think I ever want it. I guess I'm a gay Gen Xer. It just tastes good. Who's giving you? We get it. You're a millennial. Sorry, Gen X. Are you sure? Don't lie. Pizza and kale salad. Kale. Ugh. Roast beef. Is this supposed to be peaches? Is this supposed to be your peaches joke? It's been a while since we've done in the best day ever. Let's go in here. Check out some shit. If you ever have your best day ever, we have a category in Discord for it. There it is, right there. Best day ever. Come in here, post. Not best week ever. Not best freaking trade ever. Best day ever. Somehow people don't ever get that. Salvation, let's go 3 months, bud.
Closed my MTCH short today. Thanks again, BDY. Love the stream.
Love you. Hopefully you killed it on that short. All right, where are we at here? 32,000, Marty? What the? Jeez. Futures. This is why we don't see Marty anymore. He's just rolling in Scrooge McDuck money. Crazy day. See, I don't even know what this is. What am I looking at? These are just trades, Teddy. These are just trades, Teddy. Delete. Get out of here, Teddy. All right. Daily P&L. Is that a plus? There we go. See, that's how you do it. That's how you do it. Well done, General. Well done. Okay, Teddy. Let's see if you got it right this time. It's been a constant game of tariffs on, tariffs off. I was down Friday. I'm going to mute Discord. Friday after the end of the day drop, I decided to flip a coin that Trump would pause like the others. This is a trade, Teddy. Mother, this is a trade. It's not even a closed position, Teddy. Get out of here, Teddy. Damn you. Damn it, Teddy. Oh, for crying out loud, Teddy. Best mother day ever. 160 calls from yesterday played today with confidence. Only took trades that were based on graph, not intuition. My gut likes red crayons a little too much. What is this? Can't even read it. Okay, this is literally a red day. So this is literally. Oh my god, Teddy, man. Delete. Ended at 350 with his best day ever. Actually, in my strategy, instead of a dumb luck, I think tomorrow we aim for 500. Okay, well, okay, there we go. See, this is a little bit better, Teddy. Little bit better. Salt life with the baby. How cute. Hopefully, she turns out looking like mom rather than dad. All right, Drew Dog. There we go. That's how we do it. See? Best day ever. How hard is that? Teddy? P&L on baby minus 1 million. All right. B Dog up to 14K in the Roth IRA and starting one at 20K. Wait, what? 20K deposited total, just sold AMT today for a 1,200 gain. Also casually trading, dip buying. Okay, is this best day ever or is this highest account ever? I can't remember what the freaking title of the channel's called. I can't tell if I'm supposed to delete this or not. Which one is which here? Is this 14K in a day? Chat. Purge or not? Type in there. Purge or save? This is not the right place for this. Holy shit, that's a lot of purge. Okay. And ban? Purge and ban? 20K deposited and he's down. Wait, is he? No, investment return. Rate of return 44%. Wait, is he? How is it? Wait. Oh, wait. He is down. Is he down? This is even worse. Wait. Deposits 20K, ending balance 32K. He's up, but he's getting purged. All right. Delete. Get out of here. Oh, crying out loud. Oh my gosh, chickabow. Since we don't have a worst day ever, I'll plant this here. This is for my portfolio. 2%. Okay. I mean, just, do I even need to say it? Just get out of here. Had my best day ever. Thank you. Zlight knows how to do it. By the way, I think I need one more person to boost the freaking server so we can get our own little tag thingy thing. I'll look into that in a little bit. Had my best day ever, 13K day. I almost quit trading in 2023 because I struggled so much. Glad I didn't. This year has been amazing for trading. Let's go, buddy. Absolute banger of a day. See, that's how you do it. Hit my best day ever yesterday, which feels good after such a choppy month for me. Working on limiting the reds and trying to be more consistent. So I started keeping a detailed spreadsheet of my gain losses to keep me honest. Best day ever. 3,844. Let's go. I'll give you a little beer icon too. Zlight. Whoa. Zlight just had 13K day. Then he goes to 32,000. What the hell, Zlight? This is in July? It's been a while since I've been in here. Hot damn. I don't even know what to say. Thanks, Shay, for always streaming for free. And thank you, INKT. Holy shit, dude. Well done. Also, you're not a member of the 100K club, so you get an eggplant. First time ever, I bottom ticked a huge option order, 9,800 today. If ETH goes up further as I expected this week, this will be a huge win. Bought 100 ETH weekly calls at 50. Bottom price today exactly 50. Sold at this price. Okay, is this best day ever? Or are we just... I assume this is closed. Okay, congratulations, Speed. You get a cheese and a heart. This is realized. P&L day. I assume he sold. I'm assuming he sold. Oh, what the? Dude. Some of you. TOS pulling my chain. Real value was like 500-ish. But I thought I somehow completely messed up some structure option play and got lucky. Nope, just TOS being 2S. So is this not really your best day ever? I mean, I don't know what to say to that. What am I looking at here? Kiz. Probably one of the best trades I've ever made. Felt like hot shit afterwards. This is the best trade ever. Ugh. You bought this with 50x, you freaking degenerate? Oh my gosh. It went up 3 cents and you made 605%. I don't even know what to say to this. It's probably a reason why we haven't seen him in a while. Wait, this was the last week? I don't know if this is best day ever or not. We need explanation. All right. Consolas. 7% move. Plus 37. What is that? Euros? What is that? What is that? That's not euros. What is that? Best day ever. I'm going to give it to him. That is euro. Oh, yeah, that's euros. That'll look different. So far, technically second best day ever, but can't find it. Okay, big Pokemon. I mean, for crying out loud. You literally know it's your second best day ever, yet you posted it in here. Chat, purge or keep? Purge or keep? Oh my gosh. An insult? Purge all posts. You guys must be typing purge because chat is literally frozen. Big Pokemon. Chat has spoken. Yeah, that's a good point, JPM. This isn't second best day ever. You have been purged. What on God's green earth is this? That is absolutely horrific looking. Okay. Just go ahead and delete that. Oh, for crying out loud. Is this a Hot Pocket? What is the raccoon eating? Oh my gosh, that's Peach's sandwich from Chicka Bow Wow. The hell out of here. Get the hell out of here. Green today. Okay, Luke. That's not even green, Luke. It's not even green. This is green today. There's nothing green here. It's minus, I mean, maybe on the day by pennies, but this is an abomination to this channel. I don't even have to. Get out of here. What the? Okay, Bunnyville. Oh, this is not even. Wait, what? You made 100% on a $160,000 position? I'm telling you all, you think I'm joking when I say we got some ballers in here that just don't talk? Bunny Voos, this is your best day ever? I don't care if it's 2021. Let the man have his time. Hell yeah. All right. All right. Someone just deleted something. Hot damn. Jeez. All right. I think I got them all. All right. I got to look at. Hey, Good Banana, are you here? Dude Burkett or Big Harry. Any one of you guys here? Or how about this? Anyone on the beers list or the Diamond Hands list? Are you here? I gotta test something. Christopher, you are? What is your Discord name? Zokar? Can you get on can you get on Discord then? Semi, you're here? Are you online? Discord? Someone that's online in Discord that's on the beers list. Either Goat, Beers, or Diamond Hands. I need to test something. I was, but wait, that means you're still in the beers. Oh, you probably bumped up though. What's your Discord name there? Died for you. Oh, you got moved. So yeah, okay. So you can't be in the 100% club then. SPRB. Somebody just said. God damn, the spreads, dude. Jeez. I just can't trade it. Nice work, Big Dave. You're online. What's your name? Oh, so there you are. Okay. All right. I'm going to take you off the roll. So this is what I want you to do. I'm going to take your roll off here. Oh, does it change this is what I want to know. All right. Diamond Hands. Oh, okay. There it goes. Okay. It kicked you off. Now I want you to re-click the diamond, and I want to see if it gives it to you. Elay? I want you to click this, Christopher. And if you can't, okay. You clicked it, but it didn't move back up. Interesting. That's weird. Oh. And then now I'm dead. The hell? All right. I'm going to reset the beers list, but I'm going to keep this here. It's been a hot minute since I've done the purge. I know it's mid-month. I should just wait to the end of the month. I'm just going to wait to the end of the month. You can click and unclick. Right. But I wanted to see if... Well, that's fine. That's what I wanted to know, is if it allowed you back on. All right. Thank you for doing it. At the end of the month, we'll reset the beers list for the first time in like all year. But now that I know I can do it a different way, it should be easier. So Christopher, when I removed you, you had to click it, unclick it, and then click it again, and that's how you got the roll? Or the first click gave you the rollback? No, I don't think I can delete that post and put a new one up because it's through a bot that thing works. Well, then maybe it's not as easy as I thought. We'll figure it out. Everyone in the 100% club? I mean, if you like fee picks. This morning, the Secretary of War ordered a lethal kinetic strike on a vessel affiliated with designated terrorist organization conducting narco trafficking in the U.S. Southcom area of responsibility to the South Coast of Venezuela. Intelligence confirmed the vessel was trafficking narcotics associated with this illicit narco-terrorist network and was transiting along a known DTO route. The strike was conducted in international waters, and 6 male narco-terrorists aboard the vessel were killed in the strike. No U.S. forces were harmed. Thank you for your attention to this matter. Okay, aloha, hi day. Da, 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 da. Who's doing it? I don't know how that works. I'm calling it a day. $1,000. I'm gonna go mow my lawn. There's still some setups that I'm interested in, but it's been an down kind of day. I'm just gonna call it. An email that E-Train is retiring November 14th. They told me February. Did you really? I got them. Supposedly they did a big update. I'll sign off and I'll take a look. See if this is bullshit. Because it was horrible. The guy on the phone was like, last time I talked to him, you know, when they didn't reimburse me for not allowing me to sell a stock. It's like, why don't you like the new Power E-Trade Pro? I'm like, well, it's ass. So I was like, that's why. All right. See you all tomorrow. I'm going to raid Ginger. She's playing some marbles. I know you like marbles. Peace out.